What are some of the most crucial lessons you learned in the 2008 crisis? And what, according to you, would be the reason behind the next crisis if it happens? Yeah. So I would say the most important business lessons from 2008 are illiquid stocks own you in a down market and not vice versa. And so you got to be really, really careful and make sure that you only buy stocks that you can get in and out of if need be within one trading day. If you're a retail investor, and if you're an institutional investor, it might take longer than that. So before you invest in any company, always make sure to look at the volume that's being traded and never invest in a company that it trades a lot less volume-wise than whatever it is you want to buy in that day of that stock, because what will happen is you'll push it up and then you'll be a stuck holder. It's tough to get out. It's tough to get out when people are being emotional and selling everything. The second lesson I would say in 2008 is Dale Carnegie had this great quote. He said that realize that in business, quite often, people are creatures of emotion and not creatures of logic. And I think a lot of people panicked. And I was short the market too in '08, whatever. But Warren Buffett was probably the smartest one because I think it was November of '08. He started backing up the truck. He bought Goldman Sachs preferred. And you got to be very long-term focused. Warren Buffett said the longer the view, the wiser the intention. And when I used to work at Goldman Sachs, they used to say, always be long-term greedy. And so you got to see crisis as an opportunity. Otherwise, you won't make a lot of money. If you buy the same stock that everybody else buys, then there's not many incremental investors to push that stock higher. Right? So you got to be a contrarian, be, as Warren Buffett said, greedy when others are fearful, and fearful when others are greedy. Another lesson is don't put too much money in one bank, okay? And in every country in the world, almost every country, actually, I've looked into it, your government will actually insure a certain dollar amount in your bank, okay? And so let's just say, hypothetically speaking, that in whatever country you're in, the government will insure up to $10,000 in a bank. What you do then is you never have more than $10,000 cash in one bank ever again. You have it in multiple banks. In the United States, I think it's $250,000 now. Is the FDIC the insurance rate that governments will provide, the U.S. government will provide. It's different in different countries. I think Australia, it's 160,000 US. I can't remember. But make sure that you understand if your money is insured. Another big lesson is cash is the worst investment you can make in the long run. It's just awful. It really, really is. And I know that short term in U.S. or in the U.S. at least in 2008, the American dollar was strong because it was a flight to quality, and many people in other countries with currencies that maybe weren't relatively as strong bought U.S. dollars, kind of like they bought gold as a flight to quality. But investing in fiat currencies, and whenever you hear the word fiat, it means paper currency. Investing in fiat or currency is the worst investment you'll ever make because you don't have any control over how much a government is going to print of that currency. And so history repeats itself. Like after World War I, the German economy was in rough shape. And so they made a lot of Deutschmarks. That was their currency before they went on the euro. And they printed tons of Deutschmarks. And so what happened is they printed too many. And the Deutschmark was worthless. And you can do a search online on this, it's fascinating. People would actually show up literally with wheelbarrows full of Deutschmarks, worthless cash, to the market to buy a loaf of bread. And kids would play with them and make houses out of them. And they used it as wallpaper as well. And I've got a bunch here I bought on eBay for dirt cheap for an exhibit in one of my MBA degree program courses. You can get them. They're cheap. And you always want to get exhibits when you're giving a presentation, because nobody else does. And it's like show and tell, and people will love and they'll pay attention. It's more fun for you as well. You can visualize something. And then after the presentation, you could sell it back on eBay. So think of it like it's a 5% holding fee. But history repeats itself. And in the fall of 2008, Zimbabwe's currency, the daily inflation rate was literally 98%. And I have literally a $1 trillion Zimbabwe note. It's a bill. It's worthless. I got it from eBay, but it's tragic. It's tragic. And that happened in a lot of countries. And history repeats itself more recently too. 10 years later, in the fall of 2018, the Venezuelan government, the Fuerte, which ironically is Spanish for the word strong, the fuerte currency, the daily inflation rate was predicted to literally, this is crazy, literally be 1,000,000% by the IMF. So what happened was to clean the slate entirely, the Venezuelan government, they got rid of the currency entirely. And you can actually go to eBay and buy tons of the currency. And it looks beautiful, the Venezuelan fuerte. Nice and colorful, like Monopoly money, but more legit. It's like Canadian money, I guess. But no, history repeats itself. So don't ever leave, have cash only. Don't ever have cash. Like make sure that you invest, and don't just invest in your own country. Like if you're in America, you want to invest globally as well, just given geopolitical risk. Everybody should invest overseas. And the best way to invest overseas, and I'll show you this actually, this is a lot of fun. What you can do is, and don't ever buy mutual funds because they're a scam. That's right, they are. And because the fees are ridiculously high. So what I recommend doing actually, see if I can go to Yahoo Finance here, is you can type in, I don't want to read the news today, it's depressing, but you can actually type in a ticker for a country and buy that country's index. So EWZ is for Brazil. So if you buy the EWZ, which is very liquid, look today so far, it's already traded 23 million shares times $46. That's a high volume. What you find out here is that you're holding a bunch of great Brazilian companies like Petrobras, which is petroleum Brazil. And you can find out the holdings right here. And interestingly enough, Brazil is just like Canada and just like Australia in that they're a natural resources rich economy. And that means when resources go up a lot in prices like oil, etc., then so do the currencies of the Brazilian real, the Australian dollar, and the Canadian dollar. Okay, it's because what happens to the Chinese government when they want to buy a lot of commodities, for example, from Canada, they'll have to convert from Chinese renminbi into Canadian dollars and then buy oil. That drives up demand for the dollar there. A little off topic, but interesting. And then the reason I love these ETFs in general is because the fees are low. Look at this. The expense fee on the EWZ is 0.59% per year. That's really, really low compared to mutual funds where it's 3, 4, or 5%. Mutual funds are a ripoff, and 90% of them underperform ETFs, exchange traded funds. Okay, it's a scam. It really is a scam. So why do people invest in mutual funds? Because that's the way people have invested for years, and people don't like to break tradition. Also, they have very strong unions, or lobbyists, I should say, lobbies, not unions, and great advertising budgets. They're really good at it. And they've got these big corporate relationships as well. Just buy ETFs, trust me. Okay, I'm not telling you exactly what to buy here, but I'm trying to teach you how to fish instead of giving you a fish. Let's look at more ETFs. This is fun. Let's look at EWC, which is EWC is Canada, I thought. Did I type that wrong? Yeah. It's Canada, right? And so as I mentioned, Canada is a natural resource rich economy. And a financial services based economy too. There's 6 big banks there. So if we go down here and look at the holdings here in Canada, you can see it's the big banks, Royal Bank of Canada, TD, this is a pipeline company, Scotiabank. And then you've got down here Suncor, an oil company, another energy company, and then of course insurance company, another bank here. Yeah. So you can also buy ETFs for individual sectors. So the OIH is the oil services index. So if you want to buy a basket of I don't know, kind of cool oil service companies, you can do that right here. And here it includes Transocean, which has got the coolest the coolest ticker ever, which is RIG. It's kind of cool. And a bunch of other, like Schlumberger, Halliburton, etc. Or if you want to buy commodities, say you want to buy gold, don't buy gold bars because you don't know if they're real. What you can do instead is you can buy GLD, and it's obviously very liquid, trades a lot. And this is for gold shares, right? And then here we can go to the profile. You'll pay a little fee, 0.4% per year, which is nothing. It's actually pretty good. It's pretty good, yeah. And it's very, very liquid. You can buy silver as well if you want to. It keeps completing me there. Silver, there it is, SLV, yeah. Yeah, and don't pay for software. You don't need Bloomberg software. When I ran my hedge fund, I used to spend thousands of dollars every month on Bloomberg software. Don't waste your money. I switched over to Yahoo Finance. You get everything here, options even, everything, dude. And it's free and it's real time as well. Yeah. That's a wonderful thing about the internet and competition, which is great for the consumer. There are now great alternatives to Bloomberg and other products as well. Okay, cool. So yeah, and there's ETFs for basically everything. You want to buy an index for the S&P 500, you can buy the spiders they call it. So this here is a representation of all 500 stocks in the S&P 500. You can also buy the Qs, which is the NASDAQ. You go here at Qs. That's what the traders call it. They call it Qs because it's 3 Qs. They're too lazy to say QQQ. And this is, I think it's all the tech holdings in the NASDAQ, not including biotechs. I might be wrong, not sure. But anyway, bottom line is don't waste your money on mutual funds, please. Buy exchange traded funds instead. The fees are much, much lower. But make sure that you are cognizant of liquidity as well before you invest in any stock, which is a big lesson that we all learned from 2008. And if you have follow-up questions based on this, please let me know. And thanks as always.